So the risk assessment process includes the client's identification of risk, so relevant to the preparation of their financial statements. So some activities involved in this process of the client include how they estimate the significance of the risks that could affect their entity or their operations, particularly the preparation of the financial statements and their assessment of the likelihood of the risk. And when the client consider the significance and the likelihood of the risk, they can come up with the possible impact of those risks. So many entities use, for example, a risk matrix in identifying the significance and likelihood of the risk and how they can address them. So we can also check how the client take actions not to manage the risk. So there are different ways on how to manage the risk. So they can avoid it. So they can accept and manage it. They can transfer it. So those are the potential actions by the management. So depending on the severity of the risk. So what is important here is that there is a process on the part of our client for us to be able to provide, no? Kumbaga, favorable assessment, no, on this component of their internal control. Okay, so of course, if the client lacks a formal risk assessment process, then we would raise our assessment of the control risk of our client for the lack of an important process related to risk assessment. So these are some examples of the sources of risk. So if our client experience any of this or combination of this, so that would go a long way in our assessment of their control risk. So examples include changes in operating environment, so new personnel, so new or revamped information systems, so rapid growth, so new technology, new business models, products, or activities, so corporate restructurings, expanded foreign operations, new accounting pronouncement. So if any of these or some of these are present in our client's operations when we audit them, so we have to consider whether the client appropriately addressed them. So otherwise, it would contribute to our assessing their control risk at a higher level. So next component, we have information and communication. So with this, so we consider the client's information system. So their infrastructure, software, people, procedure, and data. So to process the transactions and events that the client had during the year. Okay. So this information system could be automated or manual or combination. So however, what is important for us auditors would be the information system relevant to financial reporting. So this is our basis in identifying the significant classes of transactions. So these significant operations or transactions or processes are those procedures and records that are established by the client to initiate, record, so process and report. So four important processes. So initiating, recording, processing, and reporting of the entity's transactions to maintain accountability for the related assets, liabilities, and equity. So that is why when we study a process of our client, so usually a client would have different processes or transaction cycles in their operations. So we have to consider the important points in those processes or cycle. And those important points are these 4 points. So when the transactions are initiated, so when they are recorded, how they are recorded, so when and how they are processed, and when and how they are reported. So that is why when we perform our transaction walkthrough, we're in an understanding or from the perspective of understanding the business of the client, or including their internal control. So that is the process where we trace the transaction from the origination until completion. So these are the important points that we consider. Okay. So we also have to check whether the client achieved the objective of the information system. So the objectives of the information system of our client include the ability to identify and record valid transactions. So we can check or validate on that. So especially when we perform our test of controls. Now we can check whether the client's system are able to identify and record valid transaction. So whether the transactions are described on a timely basis and the client use proper classification when recording the transactions. So the system should also be able to measure the value of the transactions, so meaning the proper monetary amount, so in the financial statements. So because if not, if the system is not capable of that, then it could result to material misstatements. So the system should also be able to determine the proper time period, so when transactions are recorded, and the system should also be able to capture the information necessary for proper presentation and adequate disclosure. So on the other hand, communication aspect of this component so include providing an understanding of the individual roles and responsibilities so pertaining to internal control over financial reporting of our client. So including the extent of the understanding of the personnel on how their activities relate to work of others. So what we can do here is we can interview their client personnel. So whether they understand that their role, the activities that they are doing, and how they communicate the result of their work to their supervisor or to their colleague, no? So in line of their work, and whether there are open communication channels. So in evaluating this component of internal control, so we can ask the different personnel of the client and ask them if they encounter a problem, how do they communicate this to management? So is there an appropriate channel so wherein they can provide their grievances, for example, or have they experienced retaliation before? So meaning they reported something wrong or not right in line of their work and they get punished for it. So because if yes, then that would indicate the poor information and communication system as far as the controls of the client is concerned. So on the other hand, if the client has a strong communication channel, so the employees are free not to uh, air their grievances to an appropriate channel. So that means strong control for this component of internal control. So next we have control activities. So control activities, so these are the specific tasks or processes that would ensure that management directives are carried out. And consequently, so this is also the component of the audit where there are specific processes that are relevant to the audit. So in this case, this is the part of the controls of the client where we will normally test or validate. So for us to decide whether we can rely or not rely on their internal controls. So some of the important control activities that will be relevant to our audit include number one, so performance reviews. So when we say performance reviews, so it involves reviews and analysis of the actual performance of the client, so versus their budgets, versus their forecast, so versus their plans. So this also include the management's own analytical review. Although we perform our analytical review, so management will often also have their own analytical review as part of their performance review of their operations. So they can also compare the data internally with external sources of information, like for example, benchmarking. So they can also review functional or activity performance. So we can test whether the client is doing or performing performance reviews. So as part of our test of controls, which we will discuss later. So another is information processing. So information processing involves controls performed by our client. So to check the accuracy, the completeness, and authorization of transactions. So this will be the bulk of our validation when we perform test of controls. So whether the client has properly processed the information in their system or in their processes. So that is why we will check For example, during our test of control, so we will check documents for attributes. Now, when we say attributes, so that means characteristics that evidence that the control has been done. Now, for example, the client, as part of their control, for example, they want to check whether the credit department in the sales process. So whether the credit department has approved the customer for credit, no, or to approve whether they have approved to allow credit or grant credit to a customer. So we can check the evidence that they used for that. For example, if the process is manual, so we can check whether there is, let's say, a signature or initial to the process, the customer order from the credit department. Or if it's automatic, so or automated, so we can check whether the system is capable of, let's say, rejecting a customer order once the credit limit has been breached. So that is an example of a test that we can perform related to this component of the client's control activity. Okay, or part of the client's control activity. Okay, so and with respect to information processing, so there are also two important categories of controls. We have what we call the general IT controls or information technology controls, which support the effective functioning of the application controls. So when we say application controls naman, application controls apply to the processing of individual application. So I believe this will be discussed in detail in your subject or course called CIS, no, or Computer Information System. Okay. So we also have physical controls. So physical controls, so these involve activities that encompass, no, the physical security of assets. So example include having a secured facility, so over the access of assets and records, no, like a building or an office. Okay, so there should also be an authorization for access of programs and files. So like for example, if the client maintains, let's say, server room, it should be properly secured and not only physical control. So the access to the system should also be safeguarded. So there would be password, there would be uh, limitation on who can access the program and files so within the entity. And also periodic counting and comparison of amounts of the assets held, no, compared to the records would also be part of physical control. So like for example, the periodic inventory count. Okay, so the periodic inventory count would mean comparing the physical quantity of the inventory, so compared on what is indicated in the records. So and then finally, we have segregation of duties, so very important. So this is the separation of incompatible functions, so such as the custody of the asset, the authorization of the transactions, so the recording of the information, and the execution or processing of the transaction. So this is done to reduce the opportunities, so to allow any person to be in a position, so to both perpetrate and conceal errors or fraud. Like for example, so those who have the responsibility of custody should be separated from those who have responsibility over recording them. So because those two are considered as incompatible functions. So because what will happen if you are in charge of the custody of the asset and you are also the one authorized to make the recording of what happened to the asset, then you can just record that the asset has been sold as or asset has been let's say lost, so but in reality you misappropriated it and no one will question because you are also the one authorized to record whatever happened to that particular asset. So that is why as part of internal control of the client, so normally with respect to custody of resources such as funds or cash, so that would be the responsibility of the treasury department. Okay, so while the official records are being maintained by a separate department, so called the recording department or the accounting department. So the accounting department is the one responsible for maintaining the records. So while the treasury department will be the one who would maintain the actual custody of the funds or the cash, the resources of the company. So that is a classic example of segregation of duty as part of the controls of our client. Furthermore, control activities can also be automated or manual, or a combination of automated and manual processes. So we have to consider that no, in with respect to our assessment. Okay, like for example, if the client is using highly complicated or highly or sophisticated accounting system, for example, it's less likely that we can rely on it. So therefore, the amount of our substantive test procedures would be increased. So instead of a controls-based procedure, we will follow a more of a substantive-based approach. Okay, but if for example, we can manage to understand the process of the client, so it's not too complicated or sophisticated, so then we can rely on the internal controls of the client. So pending our assessment on the other aspect or component of the client's internal control. So meaning to say, so that the type of the control that our client uses could influence no, our assessment and even our audit strategy. Okay, the client's control can a control no can also be preventive or detective. Okay, so example of preventive control include, let's say, selection of proper personnel. So because if the client put a competent person in a particular job or position, then errors or misstatements could be prevented. Okay, so when we say detective, so this is the type of control would uh, that would identify a misstatement once it has already happened or occurred. So example of that would be inspections or audits, so wherein the misstatements would be identified after the occurrence of the misstatements already. So that is why between preventive or detective, so preventive control would be the less costly no type of control. So but of course, the client would always use a combination of both preventive and detective controls.